Today, I want to explain how many hedge funds have likely already breached their capital requirement or margin call levels and are likely insolvent, with help from this recent breach of FINRA rulings and associated fine. I also want to talk about how other banks like NYCB are about to collapse, so stay tuned and let's make some money. Later in the video, I also want to touch on the fast-moving momentum news play from the Millionaire Mindset Trading Group, which today was ENVB, which ran for a total of 98% gains. But so let's dive straight in with the key information. So, 741 Trey tweeted saying a bank hilariously fails to maintain minimum net capital of just $5,000. Now, FINRA did also fine the bank $25,000 and the bank has since closed down, but I want to go into the intricacies of this breach. So firstly, it's talking about the ArcView Bank, which I guess was a fairly small bank as it only had a minimum net capital requirement of $5,000. Obviously, many other banks out there have capital requirements in the billions, if not tens or even hundreds of billions of dollars. But anyway, so it says between September 29th, 2020 and January 25th, 2021, what a memorable date, ArcView conducted a securities business of 43 days while failing to maintain its minimum required net capital of $5,000 in violation of Section 15. Now, the interesting part is by how much it failed to maintain this net capital requirement by. So you'd think, right, for a bank that needs to maintain $5,000, maybe if it slipped down to $4,500 or $4,000, there'd be some problems, but at least that number is still above zero. That means the bank is still solvent, it still has positive cash. Yes, okay, it doesn't meet the minimum requirements, but it's still solvent, they've still got cash, and they don't have liabilities or losses or negative cash, for a simpler explanation. They don't have customer deposits of $5,000 and losses of $10,000 where they've somehow managed to lose more money than customers have invested or customers have deposited, maybe like by leveraging that money. Now, this is what I thought always happened with banks. I knew banks could leverage their money, but I didn't think banks could lose any more than the money they had. I didn't think that banks could get past that point of zero into the negative territory. Hedge funds as well, for that matter. I didn't think hedge funds could have $50 billion and then lose more than that $50 billion with leverage. I thought when that $50 billion hit zero, they'd get margin called and effectively their entire portfolio shut down. The long positions sold off and the short positions closed. That's how my trading account works if I use an account on margin. If I deposit $5,000 and I trade using leverage, let's say 2-to-1 or 5-to-1 leverage, but that $5,000 hits zero, my position gets liquidated. But I'm going to explain with this breach of ruling and associated fine why actually for banks and hedge funds that is seemingly not the case. Because it says, and I quote, these net capital deficiencies range from $27.9 thousand to $105,000. So they didn't maintain their required minimum net capital of $5,000 and they fell short of this $5,000 requirement by up to $105,000. So actually at some points this bank didn't have positive $5,000, they didn't have zero, they had negative $110,000 past the point of margin call and actually well past the point of that margin call. And between September 2020 and October 2021, ArcView also failed to file with FINRA and the SEC 46 same-day notifications of its net capital deficiencies. So they went over an entire year without telling anyone they should have been margin called. So if this small bank ArcView went an entire year without being margin called when they lost way more money than they actually had and even more than they had leveraged, I wonder what else these hedge funds are getting away with. I wonder how long ago some of these hedge funds should have been margin called, and I wonder how long they've been escaping those margin calls for. As I said earlier today, we played ENVB for a whopping 98% gain. You can see in the pre-market I alerted ENVB and waited for the breakout of $1.47. I then also alerted the team to the breakout of $1.83, where the stock continued running too. And you can see again today Joe locked in 47% gains after his 87% gain yesterday. Jack Perkins also locked in $1,118 in profits, and Patrick also locked in $400 or $500 as well. Some absolutely brilliant gains today from my trademark fast moving momentum news play breakout strategy, which I teach in the Millionaire Mindset Trading Group, so be sure to sign up using the link in the description below. Now on that note, Investor Turf also tweeted saying AMC Entertainment has stated they reached out to the New York Stock Exchange and relevant authorities concerning issues like FTDs, synthetic share claims and other questionable activities by Wall Street. However, no action has yet been taken. Now first off, that's not saying no issues have been found or no action is to be taken. It says no action has been taken just yet, suggesting these relevant authorities are still doing investigations even to this day. And it says additionally, AMC emphasised that their primary focus is on operating movie theatres and not being a single individual company trying to regulate the entire market. This likely means Adam Aron does think there's something wrong with AMC's stock if he's gone to the New York Stock Exchange about FTDs, synthetic shares and other questionable activities, but obviously Adam Aron is focused on operating movie theatres. He doesn't control the stock market. But as Gary points out, he said a little point is the New York Stock Exchange, the SEC, FINRA and the DTCC are all in on the Ponzi scheme together. And that's likely why no action has yet come to these short sellers, because the SEC, FINRA and the DTCC are in on the crimes as well. But the French AMC ape has pointed out something with the AMC fundamentals that really shows just how much trouble the shorts are really in, saying people don't realise that AMC beat Q4 earnings with the Hollywood strike covering all of 2023. Shorts worked hard to destroy the industry to meet their narrative and to try and ensure that AMC would go bankrupt. But he said June 2 will switch the narrative and the sentiment, especially as Tony Denaro has pointed out from the IMAX earnings call. IMAX is reporting that pre-sales on June 2 are outperforming Oppenheimer pre-sales before, suggesting another movie that's going to generate hundreds of millions, if not billions of dollars potentially at the box office. And with the Hollywood strike covering pretty much the entire of 2023, 2024 is setting up to be a blockbuster no strike year. Now Frank's Place tweeted saying the stock in New York Community Bank, or NYCB, has just plunged 18% or more on the disclosure of a material weakness in their internal controls. Now back from my accounting days, a material weakness in internal controls is awful for a company's audit report, and awful for that company itself. It says according to reports, the problem stems from a lack of adequate oversight and risk assessment in the loan review process. To simplify what this means, it means New York Community Bank is struggling to assess risk and to value the loans on their books, and it's creating a weakness or deficiency in internal controls, basically meaning that internally they cannot decide how to value these loans. This is obviously due to the commercial real estate crisis, and it basically means that banks like New York Community Bank have no idea what these loans are actually worth and how much they're going to default on and how much is actually truly recoverable. They don't know how much they need to write off, they don't know how many losses they need to recognise, and they don't know what kind of provisions they need in place, because ultimately they have no idea how to value these loans because of the current unprecedented market. And he said this is a few weeks after the bank revealed an unexpected $260 million loss for the fourth quarter of 2023. Maybe that loss of $260 million should have been bigger, double the size, triple the size, quadruple the size, maybe more. He said this is the lowest the stock has been since 1997, and maybe bankruptcy for New York Community Bank is just around the corner. And finally, Investor Turf has tweeted saying China has just imposed a trading ban and levied fines against an individual hedge fund company for engaging in high-frequency trading of index futures, indicating an expansion of its crackdown on quantitative investment strategies to include financial derivatives beyond stocks. Basically saying China has fined a hedge fund for improper high-frequency trading practices, not just on stocks, but on derivatives as well. Again, it seems like these hedge funds are not just manipulating stocks directly, but also through futures, through options, through total return swaps, and other kind of financial derivatives. It's good to see at least one country cracking down on these crimes, and now I think many other countries, including the US, need to follow suit. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.